One is unable to attend today, we'll record for them so that we can put it on our website and they can view it. So hopefully you can see my screen. Yes, no, maybe so.
Yeah, we got it.
Okay. I'm gonna move it a bit here. All right. So we're just going to talk through a few pieces. I know Mark has shared a lot of information, so mine is more focused kind of on next week, which is our first week. So that's kind of what I'm going to touch on, and then we'll get into some of the other training. So I will share the site schedule. I want you all to have that information. I have made some changes. As some of you know, some of the shifts looked like they might not move forward, and so that's reflected on there. And basically, I kind of used a green highlighted version to say that that shift is moving forward. I'll talk a little bit more about that in a moment. So with that, we're going to jump into some VITA updates. So for those of you who are curious or have people who are asking you questions, we are taking appointments already. We have quite a full schedule for the first week, and it's looking like the second and third week are pretty close to being full. So we are certainly getting lots of calls and lots of people going online to schedule themselves. So there are two ways that clients can schedule themselves. They can either call 319-382-5685, or they can go online at the link there. We are having Waypoint answer our calls this year. So we have a regular person answering the phone Monday through Thursday, 9 a.m. to 4 p.m. And so that's working really well. We started on Monday because we had to get Waypoint up and going. This was kind of a last minute opportunity that came up for us. So we took advantage of our connection with Waypoint and contracted with them to do the answering this year, which has been going very well so far. So if anyone's asking you about scheduling, please let them know that information.
Hey, Meredith.
Yeah.
Can you make the display the full page?
Is it not the full?
It's the one showing the next slide.
Huh. Okay. We'll switch these then. Thank you for mentioning that. I'm going to stop sharing and see if I can get it to work better this time. Let's try this. Is it still showing you the smaller one? Yeah.
I think you have to turn off the presenter checkbox up in your,
Yeah.
if you go back and escape and go back.
I was thinking the display
There's a-
settings at the top lets you switch it.
You're saying you're using presenter. Yeah, get rid of that.
Yep,
There you
yep.
go.
All right. It's not, now it's on the other screen. I'm assuming you're still seeing my slide. We had a problem with this the other day with some presenting. It was, Zoom has changed a couple of things. That's what other people have told me. But anyway, we'll see if I can figure this out to get this switched. So hold on just a second. Let me see if I can.
You just switch which screen you're sharing.
Yeah, that's what I'm gonna try and do here. All right, so now I'm gonna try this again. Nope. It does not want to stay on the screen that I'm on. On just one moment, we're gonna try one more thing and then I'll just roll with it because I don't have that many slides. Okay, now are you just seeing the slideshow?
Bingo.
Okay,
Got it.
great. Thank you. And thanks for letting me struggle through that. Okay, so any questions about scheduling or anything? Okay. So the one other thing I wanted to mention is I know that Mark has talked about sort of the voter information that we're going to be giving out. There are 2 other opportunities we're taking to share some information this year to help our clients. And so I just wanted to mention those as well as the voter registration sharing that we're going to do. So sometimes clients share with us that they have a need for something, like they might say when they get their refund or they know what their refund is going to be, they'll say, oh, I didn't know what I was going to do for food, or I was maybe going to lose my house and now I have money for a deposit. If they share anything like that, please direct them to 211. Only if they share. I'm not asking you to do this if, to ask them what their needs are, but if they share something or disclose something like this to you, 211 is a great referral source for them. So if you don't know what 211 is, it is a information and resource hub, and it is based out of Des Moines, and the United Way there runs the 211, and they can call or go online and find resources to meet their needs. So again, we're just sharing that this is an opportunity for them. This information will be available in your site coordinator handbook at your site. And so you can share this information. We'll also try and have it posted somewhere at the site so that if someone shares something like that with you, you can point them in the direction of 211. Because we don't know all the services, and our job is just to help get them connected to something that might be able to help. Any questions about that? And then Mark touched on the voter registration information. I know he talked about that a couple weeks ago, but just as some other information for you, we are going to keep track of how many people are given the handouts, and that is because the IRS has asked us to track that number, and we're using it as part of some advocacy data for United Way because this is an advocacy component. So if you weren't here one of the weeks that we talked about voter registration, we are just basically sharing information about voter registration. There is a new box on our intake form on page 3. It's question 7. So it's on the back there where it asks sort of the demographic information questions. And basically, if they say yes, they're interested in more information, we're handing them a handout and saying, here you go, here's some more information, please check this out. And it covers all sorts of things. It covers like if people need to find a ride to get to a voting location, all those kinds of things, figuring out where they're supposed to vote, how to get registered. So it's very comprehensive. And so our job is, again, just to kind of give that handout because I know how busy all of you are. So really this information sharing is intended to be quick and just get it in their hands so that they can find out more if they're interested. The last piece of information sharing, I know this is a lot of information on a slide, but in case you were curious about this program, Mediacom has reached out to us as an opportunity for us to share about the Affordable Connectivity Program. And basically what that is it's a $30 credit per household towards their internet services. And it's something that they are offering, and there's some eligibility criteria. And again, we're not going to try and figure out eligibility criteria. We're going to give one of these to everybody because, Dixie, you asked about sharing information. This might be something that maybe they don't apply for or it doesn't work for them, but they could share this information with somebody else. So we're just trying to raise awareness because Mediacom, this is a fairly new program and they really want to get people signed up for this and to, have people utilize this in our community. So we're just trying to spread the word about it. So there'll be a little handout. It's a little small square handout that we'll put on everybody's, when they're filling out their paperwork, we'll put it on their clipboard so that they can have that and look at that. Any questions about those three? Okay. So now I'm going to touch on some first shift information and kind of the first week, just so you have that in your minds. So as I mentioned, I will be sending out the shift sheet, that sheet that has kind of all the shifts and who's working what and which role you're in. And I would like you to make sure you take a close look at what the first day of your shift is. There are several shifts and sites that are starting a little bit later. So please make sure that you're not showing up on the 30th at, for example, St. Mark's. We are doing preparation on Mondays. And so you won't have anything to prepare on the 30th because you won't have any intakes yet. So please make sure you pay attention to what your first shift day is, and then also who you're working with and all of those things. So it's helpful to see kind of when your shift will start. And it's a good thing to refer back to. And I will continue to share that because things may change throughout the season. Some people may join other shifts or add a shift. That always happens. So I will continue to share that sheet so that you can check in and see, how things are changing. It also says on there if someone's going to be gone that day. So keep that in mind as well, that it will list, if you've told me, I've tried to get it on the sheet. If I haven't, please remind me, but I've tried to put on there anytime somebody's told me that they're going to be gone for a week, I put that on there. So one of the things that the IRS has required in the last couple of years is an identification requirement for volunteers. And basically, they're requiring us to validate the identity of all volunteers using photo identification. So for your first shift, please just make sure you bring like your license to the site, and the site coordinator there will check your ID. After the first day, we don't have to do that. We just need to make sure that you are who you say you are. Some of you have been doing this a very long time. Obviously, it's just sort of a formality, but please do bring it just because we are asked and required to do this step. So please bring an ID and your site coordinator will check your ID for your first shift. Any questions on that?
Meredith, do we need to make a copy or anything?
No, this year we're not going to make copies. We're just going to check them. That was sort of, I thought they were going to do more with this. I thought they were going to follow up more with this and ask how you have proof that you did it, because they do that a lot, but they haven't. So I don't want to keep photocopies around because then I end up shredding those later. So this year we're just going to check them. So we know we've done it. We've done our due diligence and we'll just call it good at that. But thanks for the question. So for your first day, I do suggest you arrive a few minutes early as your schedule allows. I know some of you are coming from work or other things. So if you can't, I understand that. But if you can get there a little early, the first day is always a lot because that'll give us time to check your ID, make sure you have what you need. If you're preparing returns, it'll give us time to get you logged in, make sure you can get logged in and all of those pieces. And so arriving a few minutes early, especially to that first shift, really helps get things moving and started that first day. And for those of you who are new, we do provide all the materials to run a site. You don't need to bring anything except for yourself and your 4012. We will have one available at the site if you forget. So the 4012 is that book that we used for the certification in December. So please make sure you bring that. But if you forget it, we'll have one available at the site for a reference because it is really helpful when you're going through everything to have that 4012. Those of you who've been doing this a long time, some of you have your like Vita binders or your Vita bags that you bring every shift. So I know some of you kind of have those things that you do to make sure you have the materials you need, but we'll have everything else you need to be at this site. Any questions about that? Okay. And I kind of mentioned this, but please let me know ahead of time if you need a substitution. If you know you're going to be gone, like let's say spring break, you're going to be gone for that week, please let me know and I can share it and see if we can find a sub for that shift. If you are sick or something comes up kind of closer to the shift, please work with your site coordinator, let them know. I will have information for everyone's phone numbers, and I suggest your first day you exchange numbers with your site coordinator especially, and maybe your other volunteers, because communication can be very, very helpful during the season if something comes up. So if you, that first day, I suggest you make sure you have people's phone numbers, but I will be sharing the volunteer phone list as well. So you have that. Okay, so some other information. We do have t-shirts. So those of you who are new volunteers will get a t-shirt. They are gold this year with blue writing. So last year we had kind of a royal blue with yellow writing. This year we have gold with blue writing, and the plan is to go back and forth every year. So we'll have blue and gold shirts for VITA. They're long sleeve t-shirts. And I have reached out to new volunteers to ask them their size, so I will get those out. Once those are out, if you are a returning volunteer and you either lost your blue shirt, need a new one for whatever reason, please let me know, because you will be kind of next in line. And then everything else I have after that, I will offer up to anyone who needs it. So, or if you need a different size for whatever reason, please let me know. If you're a returning volunteer, I did order extras, but I'm going to try and get them to those who need them first, and then we can go from there. So I just wanted to mention t-shirts, and I will try and get those to your first shift, so you have those for your first shift. For those of you who are new volunteers, you are not required to wear a t-shirt. They are for you if you would like to. We used to have polos, and since it's wintertime, we switched to long sleeve t-shirts. They're a little more comfy, and they're long sleeved. Since we do our volunteering in the wintertime, just makes a little more sense. So you will be getting one of those if you want to wear it at your site. But you're not required to wear it every day. You are required to wear a name tag though, and I will have those available. So just some information about the season communication. So I will be sending out emails every other week with kind of updates on where we're at with our numbers for preparing returns and how many have been filed and all of those kinds of things. I will probably reach out in between if necessary, and maybe reach out about needed subs or other opportunities that have come up. But again, please work with your site coordinator for day-to-day needs. You will be able to use and access the VITA volunteer website. So where we've been putting the recordings for these kinds of trainings, that will stay available all season, and you can refer back to it as needed. I may add other things as the season goes on for your reference, some links to important documents and things like that. I was going to post the pub 17 and the other pubs that are important, whose numbers I can't remember off the top of my head right now. So those will be available on there as well. So please refer back to that throughout the season as needed. And then my phone number. So I'm out and about a lot during the VITA season. So the best way to reach me is my cell phone, not my work number. And you can see that right there. That's my phone number. So please feel free to text me or give me a call if that's easier. And I'll be happy to answer any questions as I can. Any questions on that? All right, well then you will be getting one more email from me, hopefully only one, before the season starts. Like I said, I will attach the site schedule and some other information. I'll include some parking information because some of the locations have different parking situations. So I will include that in the email. So be on the lookout for that. And if you have any questions before then, please reach out to me. Otherwise, I'll pause now for questions and then turn it over to Mark.
Meredith, will you be sending out the website for us to access signups?
Yes, sure. You mean the links for the sign up geniuses? Right. Yeah, sure. I can send those out.
Okay.
Oh, you mean for the schedule for the client?
Right. Yeah.
Yes. Yep. That information will be in your site coordinator handbook, but I will send that out ahead of time to you so you can get logged into that. My plan was to try and get it out today.
That'd be helpful.
Yep. So that you can get in and see your schedule for your first shift.
All right.
Yes. Any other questions? All right. Well, Mark, feel free to take it away then. Mark, you're on mute.
Thought I had unmuted, apparently I didn't, okay. Hope you're all seeing my screen there on the volunteer. This is winding things down here before I actually get the live stuff, so today's session. Let's try this again. It's contagious, Meredith. Having issues, okay. The agenda, we already had Meredith and the other staff talked. We're going to talk about some of the Iowa changes that have been going on this year, next year, and what didn't change, what isn't changing. We'll talk about some resource support, the resource documents, talk about low income exempt, making Iowa adjustments, that fun and games there. Part year residents, well, that's an interesting topic, which I messed up on. We'll go over the Iowa scenarios and then final notes and get ready for the next year. Updates for Iowa. What was new for 2022? Not very much. The standard tax bracket and standard deduction value shifts. The qualified business income is up to 75% of a federal, but TaxSlayer handles all that. Possibly you might do a spouse allocation. This one, again, I mentioned earlier, $1,000 income exclusion for a premium or retention bonus for peace officers, correctional staff, teachers, and childcare workers. And I have not been able to get any information on how we would identify that, aside from asking the client. I don't think it's going to show up as something specific on their W-2s or anything. But I'm assuming basically, we would just do it as a miscellaneous, as an other reduction in income on the Iowa 1040. But we'll see if we even show it, if we even see any of those. As with the federal, the mileage changed on July 1st. And those of you with a 529 account or any clients with a 529 account, the limit upped a little bit for beneficiary, they can put in a 529 account. So that's nothing too dramatic for the current tax year that we're going to be doing this season. What's going to be new for 2023? A lot. Everything I'm going to talk about here is based on IDR information. Either from they passed two bills back in 2018, the Senate filed 2417 and the House filed 2317 last spring. But we really have no idea yet what the Department of Revenue bureaucracy is going to end up doing to actually interpret and implement these in the expanded instructions. I'm going to oversimplify a bit and say this basically goes through 3 steps. They pass the law, then the IDR writes rules. Their rules based on those laws, and then the folks that like do the instructions and the forms interpret those rules and how they're actually going to be implemented. And then actually there's a 4th step. Non-TaxSlayer has to figure out how they're going to do it in TaxSlayer. There are definitely going to be some major form changes. We have no idea what those are going to be, and TaxSlayer is going to have to make some significant changes, and obviously we have no idea what that's going to be. In other words, Iowa training a year from now is going to be really interesting because it's going to be very dramatic sea changes in what we've got. What's the Chinese curse? May you live in interesting times. So why do we care about this now? It's not really going to affect what we're doing for 2022, but clients do ask us about next year and what they should do and things. We are not tax advisors, but it's going to be very awkward if we say we have no clue what's coming next year. We want to have some clue, but still the honest answer is we have no idea. With everything that I'm going to go through, there's no way we can tell somebody how it's going to affect their taxes in 2023. If I'm sitting in front of a client and the client asks me, What they should do, I'm gonna say, I have no idea. Personally, I have no idea. And my personal thing is, if I'm not forced to make a change, if I don't have any solid data to make a change, I'm not gonna make a change. So personally, I'm gonna ride it out. I'm gonna wait and see a year and see how things get affected next year. And then I might make some changes based on that. And that's what I'll tell the client. I suspect, and again, this is just suspect, nobody's gonna be really hurt by what happens next year. But there's no guarantee anybody's gonna have any great dramatic benefit either. Some might, but it's hard to predict who. With all that, I think it's still worthwhile to go over the changes, even if we can't predict what effect it's gonna have. The first big one is retirement income not being taxed, but they do have a couple caveats on it. You have to be over 55 or disabled, and it gets applied individually to spouses. In other words, one spouse can have their retirement income excluded, and the other one may not if they don't meet the thing. And I talked about drafting rules and stuff. IDR says on their site that they are still drafting exactly what income is going to qualify for all this. I'm assuming that everything our clients see will qualify. There's all sorts of nooks and crannies of different retirement income. But I think all of ours is still going to fall under the bucket of being excluded. That married filing separate combined return is gone. So all the rigmarole we're going through or can go through for adjusting between spouses, this is the last season. We'll have to worry about that. Next year from now on, all the federal qualified business income gets carried over to Iowa. And another minor one, which I don't think we see, I've never seen it. An employer can pay your student loan debt, and you can use that to reduce your taxable income. But if you have interest, you have to take that away from that student loan debt amount. Has anybody ever seen one of those? I haven't. So, but obviously there's lots of stuff I don't see. So the other big one that gets a lot of news coverage is the tax brackets. We're at 6 now. Next year they're down to 4, with the top bracket of 6%. Eventually that's going to go down to 1 flat tax in a few years. And on this page, the one that caught my eye at the very bottom there, it says Iowa Code eliminates the standard deduction effective with tax year 2023. So Iowa standard deduction is gone. Okay, what else does that mean for us? Because that raises a whole bunch of questions. So I looked around, and here's the next thing on it. The starting point for Iowa tax returns now is going to be the federal taxable income next year. And it says standard deduction and itemized deductions allowed for federal purposes, subject to Iowa adjustments. And that's the cute little one there in parentheses. So we are still going to be making adjustments. But my assumption from this, and everybody as usual, if I mess up somewhere and I'm talking wrong, please speak up. You guys have been very good at correcting me when I've messed up, and that's a good thing. That's what we want. That's why we have multiple people going over returns and such. I think this implies that by the time we start working on Iowa, any federal standard deductions or itemized deduction is already done. It's already there before we even get started on Iowa. Now, we have no details that I can find what the Iowa adjustments are going to be or how they're going to implement them. And my little editorial question there, are we even going to have an Iowa Schedule A? This implies to me that we may not even have that. So we are going to be done with spouse allocations and married filing separately combined, but we are not going to be done with Iowa adjustments. They're just going to change and be shifted. Who knows what they're going to look like? You got any questions or anything, as it going along, speak up. The other one that gets a lot of press is the deductibility of federal tax. It's gone, not quite yet. And it says specifically the deduction for federal taxes paid will be repealed. Okay, but then there's this 1-year transition period. So next tax season is going to be interesting. And they got some of the details there. This is all cut from the IDR pages. This is my interpretation. Next year, if we have tax year 22 or any other earlier tax received as a refund, or that paid in 2023, but it's from an earlier tax year, that is still going to be included when we process tax year 2023 Iowa. What we will not include is the actual federal withholding and the estimated payments that were actually done in 23 and apply to tax year 23. So we're going to have one more season where we still need to truly tell them right now, say, hey, bring back next year's return next year. Because we have one more season where it's always nice to have that. I think we want to keep telling people that. But next season, we're still going to really need it. And just to give an example of that, from one of our scenarios, the Sahlberg scenario, example, he had from 2020 for his 2022 tax year, he had withholding of $2,200. He had paid estimated taxes of $1,600, and he had paid $500 from his 2021 taxes. So that's a total of $4,300 on his Iowa return. Next season, if we use the same data, withholding, since it's done for the 2023 year, wouldn't apply. The estimated taxes, since it's done for the 2023 year, would not apply. If he owed $500 from 2022, that would apply. So his Iowa federal adjustment next season would be $500. For 2024 and every year after that, it's all gone. So we have this 1 year changeover where we still include things that carried over from a previous tax year. So that clear as mud? Any questions on that? Health insurance premium deduction. It only gets eliminated for taxpayers who are older than 65 with a net income of less than 100,000. And I've made an editorial comment there. This group doesn't have any income probably over 65. Most probably going to be, majority of them going to be all retirement. The deduction doesn't matter for them anyway. So why, I'm curious why you would take it away for them. Fine, you don't have it, and then leave it for the lower income people. Then take it away for the lower income people that really need it, because only the folks only 65 can get the deduction now, starting next year. You still can't double dip. If it's somebody that does take the insurance premium deduction up front, they can't use it for schedule itemizing on Schedule A. So you still can't double dip. But it does change some situations. Up until now, there's a question, at least in tax law, where it says, do you want to carry health insurance premiums to Schedule A? And you always wanted to answer no, because it was always better to use them up front on the front of the screen. This can create a situation if they are not eligible for the deduction anyway. You want to say, yeah, take it over to the itemized. Maybe it'll help me there because I don't qualify based on that over 65 and income. I don't think we're going to have anybody that it loses the qualification because of the income, but we will have a lot of folks over 65 who say, okay, I don't get that now, that deduction anymore, or who are under 65. I'm sorry, I'm getting confused here. Who are under 65, don't get the deduction anymore. Put it on the Schedule A. Maybe it helps them for Iowa itemizing. We'll see. But the interesting thing on that 100,000 cutoff, you have to add some stuff back. It's just basically you take whatever your net income is. They have to add back the retirement income that was excluded. They have to add back any standard or itemized deductions. And I'm assuming they're talking about federal deductions. Any qualified business income has to add back in. And any personal exemptions, which right now is meaningless because they're still there. It's interesting, those personal exemptions still exist, but they're all set to 0. So any questions on that?
Hey, Mark, just a question going back to what you said for this year's tax return. We always answer no for that question about carrying the health insurance to Schedule A for Iowa.
I cannot, since for this year, this season, for 2022, everybody can take their health insurance premiums off the top up front. I cannot think of any scenario where you're gonna move that to Schedule A.
Thank you.
And I've never run into a scenario. If anybody else can think of one, I'd be glad to hear it. But starting in 2023 and after, there could be a situation where, okay, you can't take it off the front anymore. Okay, let's move it to your itemized. Now, that being said, who knows if taxpayers are even going to be asking that question next year? Because I'm sure their whole set of screens for Iowa is all going to have to be changed and thrown up in the turmoil too. So. But again, the health insurance premium deduction will only be allowed if you're only 65 and you have a net income under 100,000 based on those adjustments. You can still itemize it, but you can't take it off up front. IRA required withholding, and this one's interesting. And that's it. And this goes back to, I talked about the rules and then interpreting the rules. And look at this, based on this, they issued this rule. That's not the law, this administrative code rule they issued, 701 whatever. And now they're interpreting that rule. They're saying, based on this rule, the department takes the position that Iowa income tax is not required to be withheld on qualifying retirement income to eligible payees. And those are two important pieces there. Because up till now, if you have retirement withdrawals, you can either shut out all the withholding and do none at all, or you had to do both federal and Iowa, and Iowa was a 5% minimum. It was not an option to withhold federal and not withhold Iowa. It appears based on this, starting the current year, that you can do that. You're not required to have Iowa withholding, regardless of what you do for federal. But again, there are two things. It has to be qualified retirement income, and it has to be a taxpayer over 55 or disabled that qualifies for the non-tax status. So if any client asks, though, just tell them, go talk to whoever's got your pension, whoever's got your IRA, and ask them how they intend to handle it if they've been notified what they're going to do. Because this is not firm. It's not in the final, Iowa instructions yet. This is their interpretation that they're proposing. But I'm certainly going to go talk to my financial folks, because that gives you like one extra piece of freedom that you can deduct federal if you want, and you're not required to deduct Iowa if you're pulling stuff out of your IRA or with your pension. Any
Mark,
questions on that? Yeah.
Mark, I've already gotten letters from my pension that they're not withholding Iowa. They still withholding federal, but not withholding Iowa.
Okay. So some of them are already proactively sending out stuff, but definitely I would check with your financial institution to make sure of what they're doing. Any other questions on that? Thanks, Ken. What is still in effect? Okay. Iowa still does not tax military pensions, defense finance accounting system, does not tax federal securities like savings bonds. Railroad pension is not taxed, so security is not taxed. We still have the issue where some that selected municipal and state bonds that are taxed at the federal level may not be taxed for not taxed at the federal level, may still be taxed for Iowa. But then none of that has changed. So anything on Iowa that you want me to go back over for next year? I mean, that's a lot they're throwing in the air, and said it's going to be really interesting how that finally all settles out. I suspect TaxSlayer and the Iowa stuff, we complain that it usually doesn't show up late. I think they're really going to be struggling to get everything finalized by January next year. We'll see how it turns out.
Mark,
Yep.
I have one question. I think it's on your first or second slide. You have a date on there of December 31st, 2023. And I'm wondering if it's 2023 or 2022. There, that one. Retirement income not taxed.
I understand. We're going to be processing this. It'll be 2024 when we do this tax season, when we process the 2023 taxes. So if they turn 55 this current year in 2023, then when we process their taxes next year, they're eligible to have it not be taxed.
Okay, yep,
That
get
makes sense?
thank you so much.
So basically, we're talking about 2023 taxes. At any time this year they turn 55, they can be eligible to have all their retirement income excluded. Good question. Okay, other late updates. I don't know if we're going to see any clients from the ingredient strike, but if we do have anybody that comes in with strike pay, it's usually on a 1099 miscellaneous in box 3, and it's very straightforward. It's just put under 1099 miscellaneous, and it will show up on line 8Z for Schedule 1 and be included then on the 1040 on line 8. So I don't know if we'll see any of that, but from what I could decipher in the IRS web pages, it should show up on a 1099 miscellaneous. And
Will
there's some
that show
things I
up as
mentioned.
earned income?
What?
Will that show up as earned income so that?
It's
they
taxable.
would- Huh?
It is taxable, whether it's earned income.
No,
Um,
it's
a good
taxable.
question.
That's not a question. Will it be earned income? Will it show up as earned income to increase their earned income credit?
That I don't know. Good question. I don't have an answer for that. That is a good
I don't
question.
either.
I'll do some more digging on that. Let me write a note and I'll do some more digging on that. Like I said, I don't know if we'll have any ingredient folks walking through our door, but they might. 2 weeks ago, I had a couple things I wasn't sure because I hadn't seen the Iowa expanded instructions yet. And basically, yeah, educator expenses limit for Iowa is still 500. The limit for K-12 is still 2,000 per child. But the child care dependent tax credit limit for Iowa got cut back. It wasn't 90K. It is, the top limit is now back down at 45K. So that did get changed for whatever child care dependent care they move over from federal to Iowa. Okay, resource support. I have been sent out resource sheets on digital asset, for whatever, if they're beneficial, if they're not, I don't know, but those are the ones I'd sent out. Sent out the school district list, the 1-year-old handbook, the gambling, vehicle registration. I'm finishing up the simplified method. I'm going to do one for part-year resident. And there is an addendum that Meredith sent to me for for last year's handbook. I'm going to check that out and then I will take a look at that, then send that out. So you'll be seeing these in the next few days. I am pondering whether I want to do a low income exemption resource sheet, if that's of any use. Go ahead and email me or let me know if you think that that's something that would be helpful after we go through low income exemptions here, and I can put together a resource sheet for that.
Mark, do you
yeah.
know anything about the savings account for education to go to a public or private school? Is that going to be taxable income or not?
I've seen no information on that. That is a very good question. And I have no idea. I'm suspecting, since they have to give it back and it's controlled and it's like an HSA and they have to give it back. And it's money that would have been allocated to the schools anyway. My first guess is it will not be taxable. That's my guess. That's just my guess. But I did look to try and find information on that. I have not found any yet. But if I do find something, I will send it out. Good question. Okay, let's talk about low income exemption. This is something that can be, make us scratch our head and is curious sometimes. Limits for 2022 is if you're filing single and you're under 65, there's the chart. If either spouse, both of them don't have to be over 65. If either spouse is over 65 and you're filing joint, on the joints, then you qualify for the higher amount. But the curious thing is, it's your net income, but then they do some add backs. So it's your standard income on line 26. And if you did any pension exclusion on line 21, that has to be added back in. And this nice little box up there at the top for Social Security, that shows in step 4, we don't tax this in Iowa, but it does get included for the calculation of whether they qualify for low income exemption. So you have to add that in. So you take their standard income, add those other 2 values, and then if they're under those limits, they qualify for low income exemption. And this is why, and I've been really confused sometimes until I figured this out. Yeah, one client gets the low income exemption, one doesn't. And you look at them, they got the same net income. How come this guy got low income exemption, this guy didn't? Well, it's because these other things are added back in for one client, and they may not be for another one. So when somebody gets low income and they say, why didn't I get it? Or they do, then because things get adjusted. They said, I only had $6,000 in net income. Yeah, but we had Social Security, they got carried over in this other stuff. So that makes a difference. The other thing that is easy to miss, and I'm guilty of this as much as anybody, if their last year's Iowa return or the current year IRA return gets low income exemption, then their federal refund is 0, regardless of what's on the previous Fed 1040. If there's any low income exemption involved in the current year or the previous year, that Fed refund number goes to 0 that you input. So any questions on that? So again, I think I will, it's not much here, but it's a page, but I think I will put this into a little more, just a simpler form in a resource sheet, and send it out. So you have this one for reference, since it's only 1 page. Any questions on that? Okay, Iowa adjustments. This can get really, I sort of tortured you and through the Sahlberg and stuff talking about Iowa adjustments because they can make a difference, but it can also be very frustrating. I sent out that resource sheet. I'm not going to go through all the details on the resource sheet, but I do want to summarize a little bit here. Some of the basic ones. Required, no matter what. We always have to go in. And enter something for the federal refund. We have to do that. It requires Iowa makes us do that. Even if the client had owed taxes prior to the previous year, you still got to enter that 0 in the refund field. Okay. Adjusting the refundable credit from the Fed 1040 on line 32. That's also important because that may change a cash refund that they actually got the cash. For the Iowa purposes, that may turn it into a payment because they may have actually had a larger tax than they had basic withholding, but they got cash back because of all the refundable credits. So it's always important to go look at that. And you'll see, I'll mention that several times as we go through here. It's also interesting whether they made a Fed refund or made a Fed payment. In both cases, you enter positive value. One adds to their income, one subtracts from, but on the adjustment, you both enter a positive value. Nothing is brought over from the federal return automatically on this. You're just putting stuff in. There are other adjustments common ones that you do that are not reallocated for spouses and stuff. Additional educator expenses. This always stays with the spouse who actually had the expenses. It is never allocated between the 2 of them. If the one spouse spent $300 and the other one spent $250, that is what you put in. If they're doing joint, then you can add the 2 of them together. If you leave these fields blank, tax layer pulls the federal values in. if you do any input at all in either field, whether it's a one field or a married filing separate joint, any input in either of those fields, it ignores all the federal values. It doesn't add what you input to them. It ignores the federal value and it will take whatever you input. So that means that if you have spouses and both spouse expenses are less than 300, really don't need to do an Iowa input because it's going to carry over the federal values. Okay. School surtax paid the previous year. There's no federal value on this, but you can put it in, but you don't worry about allocation because it's part of itemized deductions and TaxSlayer takes care of those. So if there is a school surtax, you add it to the itemized deductions. K through 12 textbook credit. Again, there's no default federal value brought over on this, but it stays with the spouse who is claiming that dependent on step 3 of the 1040. And we'll talk a little more about this later. This one, it says it, and TaxSlayer does not automatically do this. This is up to you that the textbook credit stays with the spouse who is claiming that dependent. Any questions on that? Okay. The common adjustments that we applied directly to the Iowa income, reducing interest from federal investments, usually savings bond treasury notes. Yeah, there's some exceptions that I don't think I've ever seen, but I think we can safely assume box 3 is not taxed for Iowa unless you really know otherwise. The Iowa expanded instructions do list some cases where it isn't that, but I've never seen any of them. And I'm not familiar with a lot of them. So I think it's a safe assumption for our clients that anything in box 3 and that interest is not taxable for Iowa. Adding interest from Iowa-based bonds that are not taxed at the federal level, box 8. Stuff shows up in box 8. It's usually, now this for Iowa purposes, like municipal bonds, bonds related to state schools, but it's hard to know for sure on this because most clients don't really know the details behind what created that box 8 entry. A lot of this, it shows up on something from a financial broker, some in box 8, and they have no idea where that came from. So I'm going to take the flip side of this. Assume you don't make an adjustment for box 8 unless you know otherwise. I have the stuff I've seen over the years, I only used box 8 once. And this because it was specifically to a specific 1099 interest. And the guy knew, so yeah, I had a bond that from one of the Iowa State construction bonds or something. So I said, yep, that is an Iowa State school issued bond. You're going to pay tax on that interest. That's the only time I've ever made an adjustment based on box 8. If you really want to look at the list, the step 2, line 5 in the expanded instructions has all the lists of what falls into the categories. Any questions on that? Pension from PIPERS or DFAS, the Defense Finance Administration. PIPERS, what you didn't put there is the difference between the federal taxable on 2A and the Iowa taxable in box 16. This is really easy to miss. It's not 100%, but usually the majority of the time, PIPERS has a difference there. And so what you do, in other words, if the federal taxable is 10,000 and the Iowa taxable in 16 is 9,000, you input 1,000. For DFAS military, you just take away the whole thing. If the DFAS military pension says they got $10,000, you put, say you reduce it in the adjustment by $10,000. You get rid of all of it. The other non-taxable pension is railroad, but TaxSlayer knows enough not to pull that one, even pull that one over, because you do a special input in TaxSlayer for that. So it doesn't even try to pull the railroad over. Any questions on those? TaxSlayer does the allocation on 2 items which you cannot alter. It assigns the allocation based on the pension exclusions. And for the itemized deductions, it will allocate between, if you're doing the married filing separate combined return, it will do that and you can't do anything about it. Okay. And I mentioned with the Solberg generally, the more equal this net income, the more they gain from making allocation changes and using married filing separate combined return. Once looking at monthly split gets like over 80% or so, usually splitting it doesn't help. Because in those cases, usually, no matter how you split it, the one spouse's income or with their credits drops down below zero and you lose use of some of the credits. TaxSlayer will use default allocations to pick which the filing status is best. Frequently, that's not the optimum one. You have to double check that.
Yeah, Mark, I just want to confirm that I was doing my own return. And I just assumed that filing separate on a joint return would be best. But I thought, well, I'll just try it the other way. And filing joint considerably more refund for me. So it makes a good point. Check every one of them.
And remember, when you're checking it and you say, remember, you get confused. The dollar value in the upper right-hand of TaxSlayer says, what's your Iowa refund or what do you pay? That never changes until you exit the IRA return. So you get burned. Sometimes you make a change in the screen, you get out of that screen, and you say, wait a minute, the refund didn't change. Well, you have to exit the full IRA return before it recalculates it. And that's annoying sometimes, but that's the way it is. You need to synchronize allocations in filing status. If you're playing games between married filing joint and separate combined, TaxSlayer doesn't automatically recombine or change your allocations. You have to go in and make sure those fields are shifted correctly depending on what filing status you're playing with. And that can be a little annoying. Like I say, this is necessarily can be annoying sometimes, but sometimes it can make a big difference for the client. You have to go in and back, say, if you go back to married filing joint from married filing separate combined, you got to go back in and reshuffle and back out those allocations. Any questions on that? Let's see the details. The resource sheet has got all the details on exactly how most of the fields work, and it's really screwy. I'm very annoyed, but I suppose that's the way TaxSlayer does what they can for the states. Some fields, like with that education one, it takes whatever you put in and ignores the federal. Some of them it adds or subtracts from the federal. And it's just really bizarre. And so each one, and it's not always intuitive how that field behaves. That's what I tried to put out there in that sheet, so you know what you're doing in the field. Because sometimes if you're not careful, you put a field in it, and you're totally confused with how it affects the IRA return because it wasn't what you expected. The details for the percentages to use, if you're splitting the values, are in the expanded instructions. But generally, there's only a couple odd ones. For the federal refund or federal tax paid, you have to look at last year's Iowa net income ratio, and that's how you allocate any refund or tax paid from the previous year. If you don't have that available, you default to 50-50, okay? For allocating the health insurance, you use the current year net income, but you have to take that without any health insurance information in it. In other words, so you back out the health insurance, see what the year net income ratio would be without health insurance there, and then you apply that ratio to the health insurance premiums if you're going to allocate them. And you only allocate the premiums that are not specific to an IRS form, primarily the Social Security form. Medicare and premiums belong to that person because it shows up in that IRS form. If they're paying dental health insurance for the family, even long-term care insurance, they pay it out of their bank account, those all get lumped and allocated. Because they're not, there isn't an IRS form saying this belongs to this person. The ratio, this one's also, I don't think this one's also crazy. You have to look at the current year income that has no federal withholding done. And whatever that ratio is, that's what you apply to any estimated tax payments they made during that year. So, and then the Sahlberg, they only had that one pension that had withholding. So you take all the rest of the retirement income and all the rest of the income, and that ratio is what you applied to the estimated tax payments. For Iowa estimated payments, these allocations have no difference for spouse allocation because of where it is on the Iowa return. Doing any allocations, there was no difference with spouse allocation for the Iowa tax estimated payments that are made. For almost everything else, it's whatever the current Iowa net income ratio is. If you want to shift stuff, that's what you use to make the allocation changes. Any questions on that? Okay. Part year residence, and this is where I got lazy and I did you guys a disservice when I sent out the stuff for Baker, because I should have, I'd already thrown all the stuff for the shifts adjustments for the Sahlberg. I figured, well, we're not going to play with that on this. Yeah, we should have played with them. Because you have to identify non-Iowa versus non-Iowa income. W-2s are straightforward. TaxSlayer pulls those in. Interest and dividends. And these are primarily looking at the instructions for Iowa Form 126, which is where I'm taking most of this from. And interpreting some of it. If it's a local bank or credit union branch, yeah, assign it to that state. If it's a national institution, in other words, it's prudential stuff and they send you a 1090 interest about your interest for the year, I would adjust it by your time for each state. And if you happen to know the account was not open for the full year, then you take that into account. In other words, if they didn't open the account till October, well, then you can assign it to the state where they were October through December. Capital gain, it's the state they lived in when the sale took place. You look at, that's primarily stocks. They sold the stock in August. Where were they living in August? Okay. Retirement accounts. What state were they living in when they got the money? Like IRAs and stuff. Find out, okay, where were you living when you pulled money out? Pensions or any other monthly payments, divide by the time period in the state. And again, if they started their pension mid-year, then you take that into account, adjusting the time. Unemployment, which state gave them the unemployment? Gambling, and here Iowa gets greedy. Iowa says, okay, if you wanted it in an Iowa source, like an Iowa casino, or if you were living in Iowa when you won it, if you were in Vegas and you won it, but you were living in Iowa, hey, we want to tax it either way. That is Iowa, that is gambling income that Iowa wants to tax. And any other general income is basically where did you live when you got it? That's dividing up the income. And I should have had you guys go through that. And this one next one I totally forgot about. This is just my brain mess up. Iowa reductions. So that latest Baker one I sent out is wrong. I have corrected it. I will send out the corrected one after I'm done here, because there were also Iowa reductions that needed to be put in there. If they have self-employment tax, you allocate that based on the percentage of self-employment income in each state. And for Baker, she had health insurance premiums. For Medicare, allocated based on the time in each state, because the Medicare is constant going through. For out-of-pocket, like paying dental insurance premiums and such, it's the state they were living when they paid the premium. That may be every month, it may not, but that's what you have to ask during the interview. Where were you when you were paying these premiums? Alimony, and this also applies to Baker. Well, no, this one doesn't. This is paid alimony. I'm sorry, not receiving. Divide that by the time in the state. I haven't seen any of these. I don't know if any of you have ever had a client that had the deduction where they were actually paying alimony that was qualified to be reduced. I've never seen that. And it's getting less and less likely as time goes by. But again, a payment started during the tax year, you adjust for the date. The pension exclusion. This one could potentially be a little tricky. The exclusion stays the same. If they qualify for a 6,000 or 12,000 exclusion, they get to keep that. But what changes is the amount of retirement income that might be able to apply against. In other words, if they got $10,000 in retirement income, they moved at the middle of the year, so 5,000 was another state and 5,000 was Iowa. They qualify for 6,000 reduction, but only 5,000 income was Iowa, so they only get a 5,000 reduction. Not because they don't qualify for the 6, but because Iowa only got assigned $5,000 in income out of that. So that's how that works. So that's what you have to be aware of when you assign that $5,000 reduction. Federal refund additional payment input. And this is another one that's easy to miss. Anytime it's out of state, if they did not live in Iowa the previous year, I don't care what the federal 1040 says, the refund we input is 0 because they didn't live in Iowa the previous year. So they had no Iowa taxes affected by federal data last year. So it's a 0 this year. And that's an easy one to forget. And that's another one I forgot on Baker. That's another adjustment I had to make. Tax layer will adjust some credits on the Iowa 1040. In other words, in the Baker one, it adjusted the child dependent care credit. So it takes care of it adjusts the credits. You make your adjustments in the Iowa using the taxpayer selections, the same as you do for the other Iowa. They are similar, but it's not identical. The screens, what they have on the screens for the standard Iowa adjustments, they have some extra stuff on there. They seem to provide, which is nice, some helpful notes to tell you, hey, you got this, and this much appears to be for Iowa. It gives you some helpful notes on the adjustment screens. And I'm gonna look in some more detail on that because they do change a little bit, those screens. So when I put out my resource sheet on this, I think I'm gonna try and get a little more information on that into that resource sheet. So any questions on the Iowa, out of state stuff? For Iowa. That's
Mark,
Iowa, but then what about the other state?
Mark, will you be
Always
talking
make the
about
claim.
reciprocity with Illinois at all?
We do have reciprocity in Illinois. I'm not sure how that affects us putting in the data.
Okay.
But
Yeah,
yeah,
we've
we
had
do have-
situations where people have moved from, let's say they worked in Bettendorf or they worked in Dubuque and they lived in Bettendorf or Dubuque or one of the border towns, and then they moved to, they worked in Illinois, but then they moved to Cedar Rapids. And basically, all of that income would be taxed in Iowa. None of it would be taxed in Illinois.
Good point.
And well, the other thing that's typically important there is if you are in that situation where you're in Bettendorf or Dubuque or wherever, you would normally, the proper procedure is there's a document, I don't know what the document is, that you would send to Illinois telling them that I live in Iowa. And so I expect to be taxed in Iowa, not in Illinois. And Illinois, and like I say, after that, then you would not pay any Illinois tax that year. And we've had situations where we've ended up filing or doing amendments to get money back from Illinois and stuff like that. But well, the other thing I should point out, this is probably one of the most important pieces of information, is that we treat that W-2 as a very sacred sheet of paper, and we figure we can't change that at all when we load it onto the screen. And reality is, from the federal standpoint, we don't want to change it. We want our federal W-2 to look exactly the way that sheet of paper does. But I've talked with VITA volunteers along the eastern part of the state. They will change the location for the state. In other words, it might say that we earned this in Illinois, but they'll change that to Iowa so that when they actually put that into tax layer, you don't have any issues at all. It looks just like income that you earned while you lived in the state of Iowa, which is exactly the situation that it is. Does that make sense?
So you're saying they actually do not, so their input does not match the W-2?
The federal part matches the W-2 exactly, always.
So where would you
Yes.
change that in the Iowa part?
The state information on the W-2 would say IL for Illinois.
Right?
When you input that you would put in IA, not IL.
So their W-2 input is not reflecting exactly what's on that W-2 document.
The federal part does. That you got to mentally separate that too.
Okay.
Separate
Well,
that.
okay, I understand what you're saying. Okay.
Yeah, from the federal standpoint, it's got to be identical. From the state part, the federal government doesn't care what you do on the state information.
So you've seen that, because I live in here, I would not expect you would see anybody that lives in Iowa and works in Illinois, but you're saying they were in Bettendorf and moved to Cedar Rapids.
Yeah, well, no, we've seen that. Yeah,
I have not, but you obviously have. Okay. Okay, I will make a note of that and put it into the resource sheet. Okay. That's a good point with Illinois. And that's primarily the place we would see that, although it's feasible with other ones too.
well, no, we don't have reciprocity with any other state.
I have to check on that. I know we do with Illinois. I don't know if we
Right.
we do. or
That's
do
the only
not.
state that we have that. Illinois does it, I believe, with all of their states, but we don't do it with anybody but Illinois.
I'll put a note of that then when I do the thing as far as Iowa, that if they lived in Iowa the whole time, make sure that's reflected. So we don't even have to do the,
Well, and like I said, that doesn't apply to any other
Yeah.
state. So if you lived in Council Bluffs and worked in Nebraska and you moved to Cedar Rapids, you'd have to file a Nebraska tax return as well.
any other state we deal with. I say, make sure the client is aware, no matter what state it is, we don't have training in those other states. We're gonna give it our best effort. We're gonna keep it as basic as possible. So you go to the state section, you pick your other state, pick the appropriate one. You have to remember to get that state set up in the e-file section of tax layer correctly. Because if you don't pick, you don't pick the right stuff there, it's not gonna handle that state correctly as far as refunds or paying and stuff. You have to go in there and pick your options in the e-file section of tax layer. If you get stuck, talk to your site coordinator and other volunteers. That's what we're all there for, to try and get ourselves through it. If there is a state return, make sure it gets printed for the client. I cannot guarantee that TaxSlayer always prints the state return by default for every other state. So make sure you get a state printed return for the client. And this applies both to Iowa and any state. Iowa TaxSlayer only has one date field if they're going to do auto debit, and it applies it to everything. If you say take the money out on the 14th of April, it's going to take, no matter who it owes it to, it's going to take it out. It's going to go try and take it out on the 14th of April. It doesn't allow you to say take it out in this date for the federal and this date for a certain state, and it's got one date. So remember that applies to everything. If a client is moved in and out, in other words, they came into Iowa and left and came back or whatever. Let's say they moved out on February 1st and came back on August 31st. For the purpose of those Iowa dates, put 8/31 for the arrival and either blank or 12/31 for the date that they left Iowa. Because the time is only, you're the only one that uses the time when you're allocating costs and deductions. The Iowa Form 126 actually doesn't use those dates for calculating the taxes. It takes whatever your monetary inputs are there, and it uses them for the percentage allocation on the taxes. Iowa 126 uses that percentage based on income. It does not use the time percentage for calculating that delta in the taxes. Any questions on that?
Mark, just one quick comment. In the past, on the if you didn't fill in the debit date, it would put to the date you submitted the return. So you got to be real careful, but to fill in that date, we've seen that before where it automatically put that date. So there's going to be an immediate debit to the account and you don't want that for the client probably. So
I have not checked if it does that this year. Good point. I'll check that.
Okay, on your part down at the bottom on this input from other states, you said they lived in Iowa for a month and then moved out and then moved back. Don't you have to allocate for that first month too?
You would, when you're calculating them, their income, you would use that thing, you would use that, okay, they were in Iowa for only, however many months that is. So when you're allocating income or allocating expense or deductions, yes, you use that. But don't worry about the difference in dates for inputting in there beyond because that goes to Iowa 126. And the Iowa 126 calculation actually doesn't use those dates. You use them when you're calculating the numbers you put in there, but the actual form of the calculation doesn't use them. So just pick the latest date just because it wants a date. And that's the latest date they came to Iowa. It doesn't give you the option to move in and out. But you're right, yes, you are going to take into account when you allocate income or deductions, you're going to take into account that month they lived in Iowa, that first month. Any questions on that? Good comments, good information. And Tom, I may talk to you some more about that, how to properly put that information on the Illinois stuff in there in the sheet. So it makes sense.
So I got a question about the Illinois. So if they have Illinois on the W-2, wouldn't that state income tax be Illinois and not Iowa?
If they lived in Iowa, though, Tom can take it.
Yeah, if there's an agreement between Iowa and Illinois that.
No,
if-
I get that. I'm just saying on the W-2, you say instead of putting the W-2 has Illinois,
As
but
an
you would
earned
put
income.
Iowa, but I'm just talking about the state income tax. If they're putting Illinois, are they saying that state income tax is from Illinois?
They're saying that Illinois will not tax that income if you live in Bettendorf or Dubuque or wherever. So
Oh, so in
for
other
our
words, somebody
purpose-
goofed up. Okay.
So for our purposes, we changed that. Well, like I said, there's a document that, and I don't remember what the document is, that there's a document that you would see if you lived in Bettendorf and worked in Rock Island or Mobile or.
No,
Rock
I
Island
get
or
all,
whatever.
I get all that. I get all that.
Yeah.
I
Yeah,
have no
there's a
issues with
document
that
you
at
would send
all.
to Illinois.
Tom?
Tom?
I think the question is, if you change the state to Iowa, will taxpayer assume it was withheld by Iowa? The withholding.
It will be treated as Iowa income, period. Taxpayer won't know about Illinois at all if you change that when you put it in.
So is that the correct treatment for the withholding that Illinois withheld?
Well, at that point, obviously you want to, you'll need to file an Illinois return to get that withholding back. That becomes a muddier, that you get into a muddier situation when withholding has taken place.
Okay,
Because then the Illinois income would be zero, but you have to file a split Illinois return to get that withholding back.
Yeah.
Okay.
and most people that work like for John Deere or work for Rock Island or something, but live in Bettendorf or Davenport, have a W-4 filed with their employer saying, hey, withhold this as Iowa income. And that usually
Yeah.
goes straight to
Yeah,
Iowa.
Yeah, they're gonna figure that out if they've been there for a while. And I assume most of those companies are going to try and tell them about that the first day they sit down at their job.
Yeah, I think that's true.
Not always.
That's not true for any other state though. So if someone works in Platteville and lives in Dubuque, they've got to file both returns.
Yep.
Good information. Anything else? See, that's why we have so many smart people that do VITA. Any other questions or any other information? Okay. That being said, then let's step through the scenarios that we had. What time is it? I think it is time for a break, actually. Let's take a 15-minute break here. and then we'll come back and we'll finish up. I will pause the. Screen should still be shared. So we're looking at the Iowa scenarios here. First one we sent out was Gloria Langford. And just various topics. I'm not going to go through all the notes and everything. If you have questions, you want to actually pull up some of the returns and talk about that, we can do that. That's fine. I have no problem with that. Just some general notes that we're trying to illustrate as we go through these scenarios. Was not trying to, this was not stump the volunteer or anything else. And I realized I threw a lot of these in various in the scenarios. And as I mentioned, most of the ones you see are going to be much more straightforward than this. It was just, I didn't want to send out a whole bunch of scenarios, so I packed a lot into the 3 I sent out. Just so you have some exposure to some of this stuff. Nobody remembers everything, but hopefully you have an idea where to go to get answers, where to look for the resource sheet or Iowa expanded instructions, site coordinator. At the very minimum, I certainly hope you know what question to ask. That's the worst thing in the world, to have something brand new in front of you. You have no idea even what to ask or what to do about it. And that's what we're trying to avoid. For Gloria, she had a parent as the dependent. It could be a grandparent. It doesn't matter. The 4012 talks about a parent or ancestor. They use the word ancestor. So could he be grandparent? And they don't have to live with you. That's the other tricky thing. In this case, it does, but the parent does not have to live with the taxpayer. It's really important during the interview when you have this kind of situation to understand where all the parent support is coming from and who is paying for what. And Pub 4012 Section C, especially pages 4 and 5, has the good walkthrough on this kind of stuff, because that can make a difference as far as whether you can claim them for a dependent or not. Other dependent versus child tax credit. I had stated in an earlier session, these are mutually exclusive, and that could be a little misleading. Yes, they are exclusive for each dependent, one or the other, but when you have more than one dependent, you can have a mix. Some dependents can be other dependent, and other ones can be qualified for the child tax credit. So, but one dependent can't get both of them. And in this case, the parent gets the other dependent, and then the daughter gets the child tax credit. IPERS retirement contributions. and George earlier, a while ago, had reminded me, had to tag my memory on this, because it's worth to note that this is not a voluntary retirement program. If you're working for an employer that deals with IPERS, then they will take money out for IPERS. And because of that, it doesn't qualify for a retirement contribution credit, which I don't know if that's right or wrong, but that's the way the law is. And this is also why it shows up in box 14, not box 12. Retirement credit gets calculated on the form 8880. So when you go to box 14, you want to use the option that says that it is not going to carry to form 8880. And it's interesting that after you choose that and the tax layer prints it out, that on the 1099 it just says other in the box. It doesn't say anything about IPERS or form 8880. And by the way, selecting other not listed on that list will have the same effect. It's just nice to pick the right choice, but essentially it doesn't affect the other part of the taxes. Note that IPERS contributions still do reduce, it's still a retirement contribution, but it does reduce the taxable income on the W-2. Still makes that difference between the Medicare, Social Security wages and the regular taxable wages. Any questions on those? Early withdrawal penalties. The most common qualified reasons our clients are going to have for this are higher education and medical expenses. There are others, but those are the ones that we're primarily going to run into. They have to be, in both cases, they have to be unreimbursed expenses. Medical expenses, I believe on that list, the only one I could find that has a threshold. You can only use the expenses that exceed 7.5% of the AGI. Now, this does not require you to itemize. It's just that calculation is there regardless of whether you itemize. And with TaxSlayer, the easiest way to get the number for that is go ahead and do the return, except for the form 5329 being complete. Then you look at the PDF and you look in the Schedule A, because it'll still print the just Schedule A, even though if they don't itemize. And in that line 4, it'll tell you how much of that medical expense exceeds 7.5% of the AGI. If it's 0, they're not going to get any reduction in the penalty. If it's greater than 0, that's the number you use. You go back and do form 5329, and that's the number you use. Now, there are a few cases where they don't need to do the form 5329 for exclusion. I looked at those. Some of them I don't recognize or understand, but it's extremely unlikely we'll see any of those. Primarily, our clientele is going to be paying for college and for medical expenses.
Hey, Mark, don't you also have the option of buying their first home?
Yeah, I've never seen that with ours. Have you?
Well, it's not likely, but it's still possible within our lower income.
Yeah.
Um,
I mean, that one's there on the list, and that's fairly clear. I mean, that one's not a head scratcher. Yeah, they bought the first home. You can do that. I could list it here. I should, but it's not one I've personally seen. But yeah, it is possible. Yeah, that is something our clientele could conceivably have.
Mark, can I ask you another question on that 1089R?
Yeah.
Just getting away from the withdrawal penalty, just the taxable income factor of it. You mentioned in a prior training, if the taxable amount is shown, to go ahead and take that.
Yep.
This one, it had a taxable amount shown, but then it also checked the box that said taxable amount not determined.
That is
Do
not
we just
uncommon.
Do we just ignore that check then and just take the taxable amount?
Yes, we do.
Okay, that's what I thought. Just want to make sure.
And I don't understand that. That's not uncommon where they have that box checked, but they still get a value. If they put a value in that box, we use it.
Okay.
Federal refund and taxes, and again, reminder, always check the refundable credits to adjust these values. The majority of our clients do have refundable credits from the previous year, so they will need to be checked and have an adjustment. That is extremely common with the folks that we serve in the VITA community. So that's something to always check. Health savings account. It is easy to forget that using HSA withdrawals counts as reimbursement for medical expenses when you go for itemizing or for insurance premiums. You can use an HSA withdrawal to pay for medical or LTC premiums, but that's not to the client's necessarily advantage if they have other expenses. So if they have this many total medical expenses and they said, yeah, I took $1,000 out of my health savings account, you're free to apply that where you want. So always use it to reduce the general medical costs first. So then the insurance premiums can all still go to the first page of the IRA return. When the client gives you a list of their medical expenses, you asked her in the interview, but it's very seldom that they've known to take out their HSA contribution out of that list. You usually have to say, oh, you took $1,000 out of your HSA. Okay, this list gets reduced by $1,000 for itemizing or anything. The K-12 expenses for tuition textbook. A couple key things to remember on those expenses. Tuitions and required book supplies are pretty straightforward, but for other things, it has to be a school organized or sponsored activity. There are a lot of clubs and things that the schools allow, but are not sponsored by the school. So you have to be careful with that. And it has to be something, if it's clothing or something, it's something they don't use for day-to-day wear or activity. And the Iowa documentation specifically mentions things like shoes for basketball. They can wear those basketball shoes going to the mall. So those wouldn't count. But cleats for sports or for football, You don't wear those day to day, so they do count. So it gets a little finicky in that case. Like show choir uniforms and band uniforms, that's not day to day, so yes, that does count. Homeschooling
One
expenses.
biggie, Mark, in
Yep.
there is band instruments. If they bought the band instrument, it doesn't count. If they rent the band instrument, like from West Music or somebody, then that does count. They can deduct that.
That's correct. I didn't want to
That can be
get,
a biggie for some people.
you always I don't want to copy a full list from the Iowa documentation, but that one is still worth mentioning. Yeah, rentals can be deducted, purchasing can't. Like I say, check the Iowa expanded instructions if you're out.
Well,
Oh.
and Mark, the
Yeah.
other thing that I would add here is that a lot of times, you people going to the public school, they say they didn't pay any tuition. In reality, they have paid some tuition, not necessarily very much. In years past, it's been about $65 to go to the high schools that they can point at and say, this is a deduction. And then, like you said, you have those other things that could potentially be deductions as well. Those, depending on show choir and anything that's in school that requires something that they don't have. So I very often ask, if somebody's got somebody in high school, even if they, if they're sending them to a public school, it's like, what did you pay for tuition? And, some of those folks come to realize that, yep, I did pay a small amount, well, relatively small amount, meaning $65 or whatever that current amount happens to be.
Now, I'll also on the tuition and stuff, I'll also to Joan's comments earlier. I have no idea what this new private tuition bank account is going to do for this.
That's next year.
That's next year.
issue.
That's next year, but that's going to throw this up in the air to try and figure all that out again next year. Homeschooling does not qualify. Just so folks understand that. And the other thing that don't get confused, 2,000 is the max expense per dependent, not the max total qualifying expense. If you got 2 kids in show choir, and you buy a lot of dresses and suits and things or band uniforms, your overall total for the family can be over $2,000. It's $2,000 per dependent. And if you have educator expenses, this wasn't the case here, but if you do have spouses, as I mentioned earlier, the expenses are tied to each spouse. They travel with the spouse. Anything on Gloria that you wanted me to go back over? Okay, Sahlberg, that's fun and games that I did. IPERS pension, this is the flip side of the IPERS coin. And you notice the Iowa taxable box value in 16 is usually not the same in 2A, and that's easy to miss. You're going to use the difference between those two values to go in and make the adjustment. TaxSlayer will pull 2A into the 1040. You make the adjustment and subtractions from income section in Iowa. And as I mentioned earlier, you're reducing their income, but you're still entering a positive value in that adjustment field. And as I mentioned earlier, for military pensions, it's the same field, and you're going to take away all the taxable income, not just an adjustment. Mortgage insurance. You notice there is something in box 5 of their 1098, but that is no longer a deductible expense. That's gone again. It may come back later, who knows, but for 2022, it's gone. Vehicle registration. It's interesting that pickup trucks, because of the 2 windows, anything before 2020, 2010 for pickup truck is their registration was different and can't be deducted. Starting in 2010, but then anything over 11 years has a different rule. Well, pickup trucks are starting to move now into that 60% rule. So if you got a 2010 truck, it does qualify for a deduction, but now it's more than 11 years old. So you use the 60% rule to calculate the deduction amount. So that's just something to note when you look at vehicles and the ages. Any questions on that? Qualified charitable distributions. We are not going to see a lot of these. I've only seen 1 or 2 since that I've, the ones I've handled. But there are some important things. You can't just take the client telling you, oh, this was a qualified charitable distribution. No, there has to be documentation that they have explicitly stating it's a QCD. This can be from the issuing financial institution or the receiving charity of qualified 5013C. They have to be over 70 and a half when the distribution was made. They have to be over 70 and a half at the point. Doesn't have to be 70 and a half at the end of the year necessarily, but they have to be 70 and a half at that time the distribution was made. The contribution had to go directly from the financial institution to the charity. That client, the taxpayer, could not have handled the money. Fidelity can't send you a check and you send it to the other charity. No, Fidelity has to send the money directly to the charity. And so what you do when you put in the 1099-R, like say it came from Prudential or Fidelity, you put in the Fidelity 1099-R, you reduce that taxable amount in box 2A by the QCD amount. And Tom talked about rare instances of where you don't, you alter what's on the W-2. Well, this is a rare instance where you're not going to, the input's not going to match what's on the 1099-R. This is the only one I can think of off the top of my head, but this is, yeah, you're going to put in a different number for that box than's actually on the document.
Well, this is one of those rare situations where it's going to put the taxable amount as the amount that was distributed. But like you said, you're going to change the taxable amount to a smaller number by whatever the amount was.
On that main retirement menu where it talks about railroad and Social Security and all those, there is a non-taxable distribution selection. You go in there and there is a QCD checkbox. There's no field to put any amounts in. You just go in and check that box. And what happens then is TaxSlayer puts a little note at the bottom of the 1040, and it's part of the information they transmit to the IRS that so they know the difference in that taxable amount was due to a QCD. And regardless of what the client writes down for their charitable numbers, any other charitable amounts, you want to verify that, because now you cannot put this for itemized charity contributions for Schedule A. Anything that does a QCD, they're taking it off the top at the front end, so they can't itemize it and they can't double dip. Any questions on that?
Mark, they can do a
Estimated
QC
taxes.
whether or not they file federal, and
Mhm.
for whether or not they itemize on the federal.
Well, even like if whether they itemize or not in the federal, they could itemize on the state. I mean, there's a
Right.
lot of folks that qualify for state itemizing that don't federal, but this charity, they can't use it even for their state itemizing. If they
But
gave,
I guess what I'm saying is
60
even if they don't itemize for the state, they could still do the QCD, right?
oh yeah, the QCD.
If that was their only charitable deduction, they didn't have any medical expenses or anything, they could still do a QCD.
Yeah. And that's the advantage of it. Well, there's several advantages of it. I didn't go into it here further for folks over 70 and a half, but that is one that you can get a benefit from the charity without itemizing,
Okay.
but you can't double dip. You can't use it for both. But it also, I didn't mention it here, but just as the advantage, it also goes against your required minimum distribution if you're 72 or over. In other words, you made it a charitable, but if the rules say, oh, by the way, you have to take this much money out of your retirement accounts because you're 72 or older, this QCD can help satisfy that. So it's sort of an extra benefit, a double benefit for folks once you reach that age. But bear in mind, the ages are not in sync anymore. It's still 70 and a half for QCD, but they've shifted now. The minimum required distributions now are up to 72 for most of the folks that we're going to be dealing with. Start at age 72. Any other questions on that? Estimated taxes. We don't see a lot of this. We do see some. I haven't seen it. It does show up. The key thing here is the Fed allows them to pay part of that estimated tax in January. In other words, they could pay taxes this month and it would still be an estimated tax for taxable year February 20 for 2022. That counts for federal, But Iowa will not count that January 1 when you look at federal taxes paid. Iowa goes purely, says, no, we are strictly going to do a cash basis when the cash went in and out. You paid it in January, it is not a 2022 federal deduction. So anything you put in that January 15th federal entry doesn't carry to the Iowa return. Now, if the client really made a January payment, then it has to go into that field. If you want to make an electronic tax layer note for that payment, because next season it is going to be included for 2023, they can include it. That's what I would do it, because the client's not going to remember, and they're not going to come back to the same person. Oh, by the way, back in January 2023, I made some payments that are included in this year's taxes. But those notes in tax layer do carry forward. So if you put a note in tax layer, this client made a federal estimated payment in January, those carry forward. So next time, if they come back to us, that note will be in the file and get pulled forward. So whoever does it the next year will say, oh, I see you made a payment last January. So that would be a helpful thing. If they made a payment in December, you have two choices. And I sort of pushed you toward the more troublesome of the two. Just to exercise the options of making adjustments. You put it in the January 15th field, but then you manually adjust the Iowa value to add it back in on the Iowa side. And this is what I sort of pushed you to on the scenario, just to exercise you have and do the Iowa adjustments. But the other option is just put that December value in one of the other fields. The federal IRS already has the records of when they paid their estimated taxes. Nothing you input in tax layer is going to change that. It's just a convenience. They give you the three things, the March 15th, the June 15th, the September 15th. Tax layer adds those all together anyway. So if they made $1,200 in estimated taxes through the years, you could put all of those in the March 15th field. And it worked just fine. It wouldn't care. Because the federal's already got their records. It just puts the fields into a total. It doesn't have to match the actual timing of the IRS payments. And so it's acceptable if the client just has a note saying, by the way, make sure they're actually in 2022, not January 2023. But the client says, yeah, I made 800 in estimated payments in 2022. Fine, pick one of the fields in 2022 and put it in there. It's interesting to note that on that same section, there's that same spot, you have the option, another input on there to do your Iowa estimated tax inputs in that same area of the federal return. It's interesting that the Iowa estimate does have a December, January split option. So because Iowa knows, hey, we're not going to count January, they let you say, oh, by the way, I made this payment in December. So the Iowa estimated tax does have that separation option. Any questions on that? Okay, married filing separate combined, married filing joint. I sent out a sheet with that, with all the numbers I cranked through for the South, for the Solbergs. I'm not gonna put that up here. If you want me to open it up, if you have questions on it. Any questions you have on this? You want to open up the return? You want to look at that sheet? I'll be glad to do it. I just wasn't going to put them into the slide deck. The thing to note is that their income balance on the net income changed dramatically between 2021 and 2022, and that is not unusual for our clientele. Their income can shift dramatically year to year. So in 2021, separate combined worked for them. It was a benefit. It helped them out. But then Mary Ann retires and all the net income shifts over to Gunther. And so now this year in 2022, even with reallocating everything, Mary's income goes negative. It doesn't do them any good. And so that's what you have to check in this. So basically, okay, just go to Mary filing joint, because that's where they're going to get their full refund back. Their full withholding back as a refund. So any questions on that logic and that philosophy?
So we expected to do both and see which one works out better?
Well, as I mentioned before, you can pretty well tell if, in this one, I had you do it just to show, but you probably, if you've done a few of these, I mean, I would have looked at that and said, hey, it's not even worth it. She has such a little amount of income, it's not going to make it. Just, I wouldn't even try. But that, I wanted to go through the exercise just to show you why why it shifts. If it's like you get over 85% on one side, you can pretty well just go married filing joint. You know it's going to go that way. You get to 60 or 70%, depending on what kind of health insurance they got and other credits, then it's usually worthwhile playing with it to see which one gives them the best benefit, because it can make a difference.
And remember that the first 6,000 retirement income's excluded, so that makes a difference there too. So if mostly the income on one person is retirement income, and you take off 6,000, there's not much left, then it's definitely probably going to be married filing jointly.
Now, dependents and married filing separately combined. That's interesting. I didn't have any examples of that, or I couldn't give you examples of everything. I'd already loaded you up with too much stuff. But in general, as I mentioned, as soon as one spouse's Iowa income goes negative, or one spouse doesn't have enough tax to make use of all their credits, then going joint is always better. And related to that, taxpayer defaults all the dependents to the taxpayer. So they get all the dependent credits on line 43. And if you have K through 12, all that would go to that person too. K through 12 credits should go to that. In the basic data section of Iowa, you can shift dependents between spouses. If they got 3 kids, you can say, I don't want all 3 in the taxpayer. I'm going to put 2 here and 1 there, because that moves credits. And depending on which kid you decide, and you decided which, it's up to you. I moved one person to spouse, and I think that's the person that has all the K through 12 stuff, so you can move their K through 12 stuff. And it's an easy change to make. And you can shift back and forth without really making any other changes, because shifting those credits with married filing joint can make a big difference in whether they actually get to use all their refund, all their credits, and depending on the tax balance. And then you may have to move the K-12 tuition textbook credit back and forth too. But you're allowed, but you can play with that. And sometimes it does make an advantage that if you move the credits away from the taxpayer to the other side, then they both get to use all their credits and they don't run out of tax money. Is there any questions or anything I need to clarify on that? This is another one that's easy to forget to play with, because taxpayer does all the defaults and assigns it all. And if you know, maybe if I moved a couple of their dependent back and forth, that might make a difference. Okay, this is the one that I should have followed up better on. I did you a disservice on here. The allocation for Tina Baker. This is the main thing on Tiana Baker was the out of state is the main thing I wanted to run through here. Savings bond. She cashed a savings bond while she was in Iowa. So that box 3 income gets excluded on the input screen. That's regardless of, you always include it no matter what. She cashed it in Iowa. The CCU branch is in Iowa. So we will assign that remaining $30 income to Iowa. W-2s, taxpayer automatically pulls those to the correct state, and that's based on what Tom was talking earlier, that maybe we've adjusted the state on the W-2 to make sure it pulls it to the right spot. Been with Illinois. The 1099-G, she won this in an Iowa casino, so all the income goes to Iowa. The C, she had the debt forgiven while living in Iowa, and it was from an Iowa City, Iowa credit union branch, so we're going to put it on the Iowa income. Alimony, I'm assuming, we'll assume equal payments all year. So 10 months in Iowa, 1,500 income goes to Iowa, 300 months, $300 goes to Illinois. Any questions on those? And these you would make then in the Iowa, at least like the $30 and the other W and the other 1099-G and C and alimony. Those are all made then in that Iowa state section with the adjustments options. And these are the ones I totally forgot about, and I'm gonna send out a new update on these because I forgot to put these in too. We're gonna assume our dental insurance was constant all year, and in a perfect interview, this would be a question you ask to say, okay, how did your dental insurance get distributed when you moved? Did it change? Because sometimes insurance rates change when you move. So we're gonna assume it's all year, so $1,000 goes to Iowa, 10 months. Illinois does not have an adjustment for health insurance premiums, so the other 200 just, doesn't go anywhere on that. We're assuming, again, in a perfect interview, we'd ask, we're assuming she didn't file Iowa tax return in 2021, never lived here before this year. So federal taxes had no effect on her 2021 Iowa return, so we ignore them for 2022. As mentioned earlier on this, for out of state, you, regardless of what's on her 1040 for Fed, you put 0 for the Iowa federal return refund input. And this is the other one I forgot to do and I missed. Okay. And if that goes on again, that's just for reference, that's in expanded instruction, step 7, line 27. Other notes, make sure the W-2 and other non-Iowa docs have the correct taxpayer addresses. Regardless of the discussion we had on Iowa versus Illinois, done on that section, we want the right address. Taxpayer will pull in her Iowa address. For the Illinois one, you want to put in the Illinois address when you enter it. Itemized expenses do not get reallocated. We do not make adjustments on credits directly. We didn't enter any changes or allocations for child care expenses. Taxpayer adjusted the child dependent care credit based on the new income ratio. The rule, and as I mentioned earlier, the rule that Iowa uses on the 126 to adjust the tax is relative to the income percentage, not the time spent in the state. We use the time spent in the state to figure out these allocations we put in, but then the Iowa 126 just takes that relative income adjustment and uses that to apply to the tax. Any questions on those? Okay, interviews. Talk a little bit about anything, but I got to say before anything, I'm going to go back over on any of those. Any more questions on those scenarios and stuff?
Hey, Mark, just a process question. On those last 2 scenarios, we're doing allocations either between the spouses or between different states. Do we put like our calculations and notes like on the intake template to help the reviewer?
Good question. You're such a good lead in, Mark. I like that. Thank you. Let's talk about interviews. The perfect interview I mentioned earlier, this does not exist. We all do the best we can. There's a lot of variables, a lot of clients, time constraints, tax situations. Be considerate and civil with the client, but do not be afraid to ask questions. If it affects their taxes, we have an obligation to try and ask and find out what's going on. You can do it, try and do it, even if it's something that might be a little sensitive. Say, hey, I'm sorry, we really need this for the taxes. Did you do this or did that happen? Let's talk about what Mark was talking about with notes. There's the VITA intake sheet. Okay. This is not mandatory, but can be extremely helpful. I mean, Tom had asked earlier about, do you really need it if we're doing it all in person? Well, it's up to you. Again, it's not mandatory. The end goals, we have a couple end goals I'm going to put here. We want to capture and calculate all the important information just once. Making 3 people do the same calculation and same stuff is not, when they don't have to, is not a good thing. Also, it helps filter out what we do not need. And the key thing is make it understandable to the next person looking at it. I don't care if you use the intake sheet. There's notes on the 13614C. I a lot of times write down on the photocopy. If it's not in person, I'll write notes on that photocopy page of the IDs and the social security numbers. You can have your own blank. I don't care. It doesn't matter. The point is to work toward those goals. Capture what you want to do from the interview. Capture it once. Make it understandable. and then filter out what isn't needed.
Okay, it was very confusing when you had on the intake sheet, and then you gave like the client's like medical expenses. Could somebody write a note, this total on the Vita intake sheet is the totals from their medical sheet that they provided?
Okay. The point of that, Joan, yeah, we could write a note saying, but I did not throw into any monkey wrench. I did not make any of those medical expenses unqualified. If they list $1,500 in medical expenses, but 300 of them aren't qualified on the intake sheet, you want to write 1,200. And then, yeah, you probably want to write a note saying, hey, $300, or on the client sheet, write a note saying, hey, this 300 doesn't qualify as a medical expense. So that's why I would like it on both places. Somewhere besides the intake sheet, I want to say, yep, these are the qualified, or if somebody knows to say, okay, as the interview, I have looked at these numbers, and I said, these are all the qualified expenses. And it may or may not match what the client's got jotted down.
Yeah, but to know, yeah, you should say though, this is total from the client sheet.
You can, okay.
Yeah.
That's-
For me, I don't know whether it's confusing to other people, but it was for me. Finally, I
that's
figured out, oh, add these up. Oh, that's the same as the Vita intake sheet.
Yeah.
You know, there was no notation to that effect.
Steve, you had a comment?
Yeah, especially when you're giving back a return and you're not the reviewer, you're not the person who did the calculations, you know, on the intake form when we did it separately from the person. It's very helpful to have notes on the 13614 that refer us to a separate sheet of paper that had allocations or a list of medical expenses or whatever, however we determine what goes on actually into the tax form. Sometimes you see something in the tax form, but you can't figure out where'd that come from. It's very helpful to have a note on the 13614 that says, oh, there's a separate sheet of paper that has the allocations on it.
Okay, to that third goal, make it understandable to the next person looking at it. And Joan saying, I didn't do a very good job of making my intake sheet understandable to her. So that's illustration of that goal that I didn't fulfill properly. Good point. But those are the goals, and whether the intake sheet works for you, and whether it's a QR person, or whether it's not in person prep or any of the QR, they're still going to double check some stuff. But it's much quicker and more efficient if that data is clear and summarized for them.
Mark, I would add here that for someone who is working at a drop-off office, you might be giving back a return that you have no clue about at all because somebody else took it in, you know, at a different day, and somebody else did the prep and the quality review. So obviously, the more clear information that is on the 13614 or, you know, on the intake sheet, the more clear information, the easier it will be to explain why this return turned out the way it did, if you've never seen any of this information before yourself as you're giving it back to the client.
Any other questions or any other comments? Okay. Final resource. Speaking of resources, okay, so those resource sheets, did anybody, I forgot to ask earlier, are there any of those resource sheets that are confusing or not clear that you want to open up and talk about? Or anything that you want added to any of them?
Just one quick comment, Mark, those K-12 expenses, they can add up pretty quickly. I was just looking at the Linmar for 2022 and it was, I think it was $90 for high schoolers. And if they had a kid in band, even if they were renting their instrument from the school, it was still another $50. But even if they rented an instrument from like West Music or something, I'm not plugging for West Music, but if they rented it from somebody separately, they still charged the family $25 because the school was helping the child maintain that instrument as well. So it can add up quickly. An orchestra, if you're an orchestra, there's another $10. So I mean, you can have $140, $150 real quickly that goes on that K-12 sheet per child if they're in high school.
Good point.
Mark, a question came up earlier about strike benefits.
Yeah.
I'd refer everybody to D58 in the 4012 and explains it in detail.
Okay, excellent.
And it's recorded as other income, not under miscellaneous.
Really, even though they give you the 10 miscellaneous form, you found something I didn't look for. Is that? Let me double check. You said it was D what?
D58
Let me look quick.
under 1099 miscellaneous.
Oh, okay. Thank you. This is why we have smart people on the. I think I did not go and look that up specifically. I assumed 1099 miscellaneous, not a problem. I will update the slide and I will make a note of that. And that is good information. I don't think it would make any difference actually in the end taxes, but it's good to know it as far as properly filling it in where it goes.
And it shouldn't generate earned income credit.
That's the
Coming
reason.
in that way either.
That must be, I'm assuming that's the reason.
But apparently it does create earned income.
For other income?
Well, if you read down, it talks about checking the box.
Ah,
Check the earned income box, so it must be earned income.
Okay. Where are you looking at? Which box are you looking at on that page?
On the right-hand side, the shaded column,
Okay,
D58,
oh, and item number 2 there, it says, yep,
right?
choose strike benefits and check the earned income box. Okay. I had not dug into the 4012 on that yet, so I appreciate your figuring that out.
But I just remember reading it somewhere here last week and I was able to find it, so.
And I think that's worth, I'll modify the slide. And that's worth
Okay.
probably sending out something to folks and let them know.
Mark, are you gonna send all the
That's not,
slides back?
that's not intuitive. Steve, you had a question?
Right. we
Mark, are
could
you
have
gonna send all
plans.
the slides back out again?
The slides will be posted on that website.
Okay, on the training website?
Yep.
Okay,
Thank you, Bill, for that.
Yeah, I appreciate you.
Mark, could you post the resource sheets out there too? Because I'm a little afraid I may not be using a final version that then you changed.
Okay, I will have Meredith post those as well. Good
I can
point.
definitely do that. Yep.
Any other questions or comments? Anything else we want to go back over? Okay, click back over here, get final resources. Okay, school district locators, especially for Jones, for some folks that if they're not from Cedar Rapids or if they're living somewhere, you're not sure what school district they're in. Those are 2 good school district locators, the niche district locator and the great schools. There's others. I'm not saying these are exclusive. Those are the 2 that I found useful and helpful. And I sent you the school district surtax list, but it's also available online. And you can search on just Iowa School District Surtax List 2022, and it will come up. So any questions on those resources?
Mark, one other quick comment on school stuff, and this goes back to K-12 stuff again. At Linmar anyway, and I think it's true at the Cedar Rapids Community Schools, if the kids took a Kirkwood course, but then later decided to drop it after they started the class, they get hit for a $250 fee, or their family does, for a drop fee for that class. That's also counts as a tuition fee. They're a full-time student at the high school, so it counts as a K-12 tuition fee.
Okay. IRS access. If they need to get stuff options for the IRS, they can log on online if they have a login. There's a couple of phone numbers that is transcripts. They can call for a if they wants a transcript, the general phone number there, local office to try and get an appointment. And you can get a transcript mailed with, if you don't have a login, you can get a transcript mailed to you. It's like a 5 or 6 days to get it logged to you. And there's the link. And you can say, mail me a transcript, and it'll use whatever address. You can give it your name and stuff, and then it'll take whatever address it has, the latest address it has on file for you, and mail a transcript to that address. If they need a new account, then they have to do that ID.me, that third-party company, to set up an ID.me account. If they already have an ID.me account, they can use it, because some of the other federal offices also use the ID.me. So once you got an ID.me account, there's like 3 or 4, Social Security, Treasury, IRS. There's like several federal offices you can now access if you have the same ID.me account. Anything else on that?
Hey, when you say transcript, is that like wording of the discussion you had with them?
Well, if you want to know last year's, so what did you get for refundable credit? Well, I don't have my 2021 return, but I can't subtract the refundable credits because I don't know what it is. Well, I get a transcript of their 1040. That's what I mean by the transcript. They'll
Okay.
reprint their 1040, and you can see, oh, these are the refundable credits you had.
Thank you.
That's the main need for that. And I say after next year, after next tax season, the need for that will significantly decrease, but
Yeah, another time you need transcripts sometimes is when somebody's trying to file for a previous year. They've never filed before. They've been working for 2 or 3 years.
Yeah.
You need to get transcripts. The transcripts will not include any Iowa information. They only include the federal information. Or if you're doing an amended return sometimes and you don't have the previous year's return.
Mark, I have a question that's probably directed towards Meredith. In the past, we've had a document where their refunds from prior years has been printed out that we can grab, in some cases, if they didn't bring in last year's return, or we don't have readily access to it, we can pull that down and find out what their refund was from the previous year. Is that a possibility this year?
So because we have all of our tax layer accounts, and site coordinator should be able to log into any of the tax layers, it is a security thing that having that printed and potentially grabbed by somebody, there's personal information on it. We of course don't have social security numbers, but you will have access to all the tax layers, so you should be able to go in and search them and find that information so we can keep it more secure.
good reminder to say they may not have last year's return, but if they did come to one of our VITA sites for United Way last year, it'll be on one of those, since they're all open and accessible now, because we've opened some of them back up, should be able to log in and find them.
We maybe had this discussion before, but if I'm doing an intake specialist at a site and somebody says, well, I didn't bring my last year's return in, but you guys did it last year. Do we expect that intake specialist to print off that last year's return, or do we going to pass that along to our prep people?
My recommendation is that whoever has access to a printer, somebody should have access to a printer at that site, and they should be
But
able
the
to pull it up.
the intake specialist should do it.
Well, whether it's their site coordinator or them, the intake specialist may not have access to a printer right from their PC. But
Well,
whoever
and
has-
my point would be that I think the intake specialist should do it, which would emphasize the fact that they need a PC and a printer almost from day one. But I shouldn't say almost, they really need it from day one.
And they all will have that. All the intake sites will have a PC and a printer.
On day one.
Yep.
You sound worried, Tom.
Yeah, and that's a good point, Tom, because sometimes they'll say, oh, you did it last year, and you go looking and we don't have it from last year because it really went to an ARP site or something. People get confused between us and ARP sometimes.
Yeah.
The other thing that I've done in the past is if the printer is not cooperating with me for whatever reason that first day or two, you can write down the return information that you need, because the computer should at least be working. And so you should have access to at least confirm that we did do it. So that's an important piece of that process, is like, because again, to Steve's point, sometimes people think that we're other programs. And so we didn't actually do it. So we just need to confirm that we did actually do it for them. And then you can write that information down, and then we can, have the information that we need in order to prepare the return.
Well, and I think printing it off gives the preparer and the QR person just kind of warm fuzzy feeling if they can actually see it. It just makes you feel
Yes.
better to have complete information in front of you.
Yes, absolutely. Best case scenario, we print it off, but I know sometimes, printers and things like that don't cooperate always. And so in the need of, we have to keep moving, time becomes of importance, then making sure we have it at least, and then moving forward with that.
Meredith, do you know, is ARP doing returns this year?
I do not believe so. They have not come back to my knowledge. But some of you have worked with them before, so you might have more inside information. However, we do have another VITA program in the area now. They are called Mana Outreach, and they're actually in the United Way building on the second floor. So you may get people, they should know that we're different, but if you do get somebody saying, hey, I went to United Way last year and got my taxes done, that is a different program. That's not us, because we're not doing actually any taxes with clients in our United Way office. So just an FYI. And they do it all year round. Mana Outreach does it all year round.
And so if they say they did it at United Way, and they actually did it in person at United Way, that's not us. We won't have access to that.
Correct. Yep.
As far as AARP, that should pretty much be going away, because I don't know what Arlen and Joe, you can say, last year, I actually got an email from AARP saying, hey, this year I have seen nothing. So I don't even know if they're even in the region anymore or anything. I don't know if Joe or Harlan, I don't know if you've seen anything.
AARP is not open in Cedar Rapids this coming year. We were given the opportunity to volunteer in Iowa City, so the Iowa City office is open, but not here in Cedar Rapids.
Okay. So you're not going down to Iowa City? Okay. Anything else on that? Otherwise, next steps. Make sure you're signed up for site times. I mean, she's got the final one she's going to send out, but if you have opportunities, I'm sure she'd welcome. We can always open up more slots. I mean, we hope that you're committed to the slots you signed up for, because they're going to open up for the clients. But if you say, hey, I can sign up for another slot, great, do it, because Meredith can always add more opportunities for people to sign up. We can always get bigger. Getting smaller is harder. Verify you have a login. You can do this without waiting until you get to the site. You can go on your PC now into the live one and make sure you can at least log into Live Tax Layer.
Well, it depends on your site. So I would just make the plug that each site has a different tax layer. So I can send out the information to actually get you to the right tax layer, because every login is a little different depending upon which site you're logging into.
I would suggest that, because then they can try before they show up saying, yeah, I can sign into U name or P name or
okay, so I will send that out today as well. So you can try and get logged into tax layer before your first shift.
Now, mind you, even though you get logged in at home, you go to that site, it's going to do a two-step verification. You're going to have to re-verify on that different computer, probably, but that's still at least your login will work. And then download any support resources you want. If you want, say, well, you want any of the pubs, any of the resource sheets, you can print them out. Say, I'll Meredith have them we'll get them out on the volunteer website. Get the resources you want to take with you and get ready to go.
Mark, may
Yeah.
I make a request on the resource sheets that you update? Would you put the date that they were updated so we then know we have the latest one? I think that would be very helpful.
Okay, good point. Thank you very much. I'll make a note of that. That is a valid request.
Meredith, did you have a decision on land library?
Yeah, so far, we are only gonna move forward with one shift at Lad Library. So if we are able to find another site coordinator who could work some other shifts with another volunteer like you, George, then we can move forward. But right now, we don't have a site coordinator or a greeter there, and those are two pretty critical pieces in order to move forward with that. So right now, we're only gonna have one shift at Lad. And that will be Mondays, and Tom will be doing that.
Okay,
Is there a reason you're not opening that up for next Monday?
No, that's open for next Monday.
So
Glad
next
is-
Monday, 1 o'clock or whatever time it is that I'm
Yeah,
supposed
noon,
to be
yep.
there?
Yep,
Okay, I'll be there. Okay.
yep.
Thank you.
It's Monday night that wouldn't be open.
Well, Monday night at Mark's
Yeah,
will not have any, well, we'll have a little bit of input.
yeah. We'll wait till Wednesday, though, I think.
Okay.
Where do we, look, Meredith, to see if there's any open appointments left at our site or at any other site?
So, Bill asked for that earlier. I am sending an email out this afternoon with information on how to log into the scheduling tool and see your shifts. So you'll have access to that today. And then you
And
can,
that'll tell us if there's any open appointments.
yep, and I don't believe there is.
We're filled up already.
I mean, like later in the season, there's openings, but not
Yeah,
like the first
Yeah,
day.
that's what I
Yeah.
was looking for,
Yeah.
is later in the season, if we need to tell, but I'm sure we're gonna get people try and walk in at the library and the Marion
Yeah.
Library, and we need to refer them, here's where you go also to sign up for an appointment.
Yep, so I can send that information out. The library staff know as well.
Okay.
So they can also, potentially
Refer
help.
people.
Yeah,
Good.
because the computers are available there, so they can easily just hop on a computer. And if they need help that way, they're, if they need technology help, then somebody
Good point.
can be able to help them get an appointment. In the instance that you're not able to, squeeze them in for whatever reason, because I know we don't encourage that, but it happens.
I'm sure we'll get a few.
any final questions or anything else we need to go back over?
One other thing I did not mention is I know last year, sometimes we would have people who would take like 4 appointments in one shift, one right after another. And so then you'd end up having, and that person really only needed one, but because we do allow people to schedule themselves, sometimes things get a little tricky with technology and they end up scheduling themselves for multiple appointments. So what we're doing is we're having somebody who's going to go in and sort of manage that schedule. So that should reduce the number of appointments that get, wasted by people who are not actually going to be using them. And we'll be following up with people if they have more than one appointment in a shift. So we confirm that they actually need those appointments. If they don't, we'll be canceling those and opening those back up so people can sign up for those. So just so you know that we're going to try and make sure we make the best use of our appointments as possible. Any other questions?
One real quick one, kind of along those same lines. Last year, if I had somebody come in and they also had a previous year's return that needed to be filed, sometimes it was just one, we'd take them, even though they only had one appointment. They
Yeah.
show up with 4 returns. Oh, yeah, they've never filed a return before, kind of thing.
Yeah,
Then we tell them, no, you got to make another appointment to do those others. Actually, make 2.
for sure. And it does say in the instructions, and the waypoint schedulers know that they need an appointment for each year of taxes. But I think, especially Bill and I talked about this a fair amount, but there were people who would sign up for multiple appointments and didn't need them, so they were only just doing 1 year and they would sign up for 2 or 3. And then you'd have those spots that were wasted and weren't used.
When we talked through the process a couple of weeks ago, my suggestion, I had a suggestion that basically, if they walk in, with current year and 2 or 3 previous years. They only got one appointment. They say, go ahead and do that first year, the current year, because you need to go, and then take those other years and turn them into a not in person. Say,
Yeah.
okay, take these, we're gonna get your information, but you're gonna have to come back in 2 weeks or 3 weeks and pick these up.
Which I think is a good, plan, because we obviously want to serve the people that have the appointments and not make anyone wait, even though I know we'll all try to be flexible and fit people in. So I think that's a great way to do that. If they show up, they have one appointment and they show up with 4 years, say we can't do all this right now, but we can either take it in, or you can come back and we can take it all in at that time.
Well, another scenario that gets confusing sometimes is that someone will come in with multiple appointments and they've done it for their other family members. So I mean, the same person's name will show up and they have 4 appointments. But keep in mind that those are, 4 different people at different times.
And our process will just be to confirm that they actually need those appointments. So if they're like, yeah, I signed up for my brother and my mom and my college age kid, fine, great. You can keep all those appointments and that's fine if they're under one name, but we just want to make sure that they're actually going to be used is basically what we're trying to do. Any other questions for me or for Mark?
So just for general thing, so as far as the not in person, Hiawatha is self-contained.
Yep.
They're gonna be doing all theirs. Who's coming to United Way to be done for prep, and who's going elsewhere for prep?
St. Andrews is coming to United Way, Marion is coming to United Way, and then Cedar County is also coming to United Way.
Okay.
And then as far as LAD, that's going to St. Mark's.
Okay.
And so that'll be kind of the process there. And
Okay.
Horizon, I should say Horizons as well, will come to United Way for the little bit of intake that's
But
happening.
mainly, but basically, so Lab goes to St. Mark's, Hiawatha's contained, and everything else is going to United Way.
Correct, yep.
Okay.
We have less intake overall. And we have probably more preparation, so we should be in good shape.
Okay. Anything else? I've run out of my bucket is empty here. I've gone through everything. Anything else? Got anything else? Otherwise, we'll get started for real next week. So I'm hoping
Well,
everybody feels, like I say, if you have any issues, again, the whole point here is just so you feel comfortable knowing where to go to look for stuff, or feel comfortable asking the questions of people around you so you can get the answers you need. As very obvious today, nobody knows or remembers everything. So collectively, we try and get it all together and do it right.
And I will hang out for another minute or two after people start leaving if you have a specific question for me. Otherwise, looking forward to a great season. I want to also take a moment to thank Mark for all of his work with all of the training that he put together, the time and energy to get everything together, put those scenarios together for all of you. Mark does a phenomenal job, and I am very appreciative of him taking this on. So thank you for all clapping, those of you who are on video. But just a moment to thank Mark for all of his hard work.
Thanks, Mark.
You're
Mark,
good.
you did a great job.
Thanks, Mark.
You're all very welcome. I'm glad it's helpful.
All right, well, thank you all, and we'll see you here soon.
Meredith, I've got a question for you. For Monday night, are you